For the past few months, the dollar has been riding high, both because markets were exceptionally optimistic about the US economy and because there was a widespread sense that Trump's tariffs would do more harm to other economies than the US. However, in the past few months, anxieties about Trump's erratic trade policies have sparked somewhat of a sell-off, which has accelerated into a full-blown crash in the past couple of days. So in this video, we're going to take yet another look at the declining dollar, what it means for the US economy, and how it could set up an uncomfortable showdown between Trump and the Federal Reserve. Never miss an episode and always feel in the loop by subscribing and ringing the bell. So let's start with a bit of context. As we've mentioned in previous videos, the dollar was actually riding pretty high until a month or so ago. Once it started looking like Trump might win the election, back in about September last year, the dollar surged against other currencies. The best way to illustrate this is to look at the so-called dollar index, which basically measures the strength of the dollar against a weighted basket of other currencies. According to this index, the dollar rose steadily from late September before peaking in early January at nearly a 3-year high. So, why did the prospect of Trump's re-election, and then his actual re-election, trigger such a surge in the dollar? Well, there were basically 3 reasons. First, investors anticipated that Trump's policies of tax cuts and tariffs would mean higher inflation, which would mean higher interest rates from the Federal Reserve, and therefore make it more attractive to save in dollars. Second, there was a widespread sense that Trump's trade wars would hurt other economies more than the American economy, which made other countries' currencies less attractive, thereby boosting the dollar. Because, after all, the dollar's value is determined relative to other currencies. And third, there was a sense in America's business community that Trump's promised agenda of tax cuts and deregulation would boost growth. Now, this wasn't necessarily a good thing from Trump's perspective. After all, he and senior members of his team have occasionally suggested that they would want a lower dollar to help make American exports more competitive and reindustrialize America. But it was nonetheless a testament to some genuine optimism about Trump's economic policies. However, a couple of months ago, the dollar started slipping. This was in part because investors became slightly more optimistic about other economies, including Europe, China, and Japan, which strengthened their currencies and therefore weakened the dollar. But it was mainly because, even then, it was becoming clear that Trump's policies, and especially his tariffs, were just too unpredictable, which was taking a toll on both consumer confidence and business investment. However, this slippage has now accelerated into a full-blown crash since Trump's Liberation Day. As of Monday morning, the dollar index is now down nearly 10% from its January high, and falling. Similarly, the euro is now trading at $1.14, its highest level since 2022. This is a remarkable turnaround. Only a couple of months ago, people were talking about the prospect of the dollar and the euro reaching parity. So, why is this? Well, as you probably already know, this collapse is a symptom of the fact that markets and investors really aren't optimistic about Trump's economic policies, and especially his tariffs. It's not just the magnitude of the tariffs, although that's clearly part of it. While Trump has now scaled back some of his tariffs, the 145% tariff he slapped on China will effectively sever all direct trade between the world's 2 biggest economies, with massive economic consequences. It's also the erratic way that they're being applied. No one knew how big the Liberation Day tariffs were going to be until Trump brought out his chart of doom, and no one knew he was going to roll them back until the last minute. Not only had this massively undermined both consumer confidence and business investment, which is why most analysts now think the American economy is headed to recession, it's also terrible for Trump's stated project of reindustrializing America. Because building out factories and power plants would require massive investment over a long time horizon, which in turn requires economic certainty. On top of that, the tariffs are also badly designed to this end. Take Trump's recent exemptions for Chinese-made smartphones, for instance. This is pretty great for American consumers, who are otherwise going to have to pay hundreds of dollars more for their smartphones. But it's actually pretty terrible for American producers. Imagine you want to manufacture smartphones in the US, for instance. You've now got to compete with exempted Chinese imports, and you've got to pay a massive 145% tariff for any components you might want to import from China, like batteries or screens, which actually puts you at a disadvantage to your Chinese competitors. Anyway, the point we're trying to make here is that Trump's tariffs have spooked both markets and investors, which is why the dollar is selling off. This is the same thing that's driving the concurrent sell-off in treasuries, i.e. US government debt, which has pushed up borrowing costs for the federal government. The annual yield on a 10-year treasury, for instance, has risen from 4% to 4.5% in just the past week or so, which is a ridiculously steep increase by treasury market standards. This has all pushed the US even closer to a debt crisis, not least because earlier this month Republican majorities in Congress approved a blueprint budget that could add $5.8 trillion in further borrowing to the budget over the next 10 years, according to the Nonpartisan Committee for a Responsible Federal Budget. This feels dangerously reminiscent of the Liz Truss fiasco in the UK, when Truss's attempt to borrow lots of money resulted in a collapse in the pound and a spike in bond prices that ultimately required intervention by the Bank of England. Anyway, what does this collapse in the dollar mean for the American economy? Well, while it might help make American manufacturers and exporters more competitive internationally, any gains for them will be offset by the chaos of Trump's tariffs. Instead, the main consequence of the dollar's decline will probably be an increase in inflation, because imports for American households will become more expensive. Trump's tariffs were always going to be inflationary in the short term, but there was some hope that the consequent surge in the dollar would offset some of these inflationary pressures. If the dollar is declining, however, this will instead exacerbate the inflationary pressure introduced by the tariffs, pushing US inflation back up. This would be bad enough, but it could all be made a lot worse by Trump, who could start leaning on the Federal Reserve if it looks like they're going to raise interest rates to combat this renewed bout of inflation. A showdown between Trump and the Fed would really spook markets, and if Trump were to win that showdown, i.e. assert political control over the Fed to push for interest rate cuts, the inflationary risk to the US economy would be massive. Regardless, in 2025, one thing is certain. We can expect the news cycle to continue being dominated by these same major figures. But who's the most influential? In the most recent edition of our magazine, Too Long, we find out. That's because this 72-page issue runs down our official ranking of the world's most influential people, a vote which saw the TLDR team and more than 15,000 of you casting ballots. In the magazine, you'll learn the entire ranking. Plus, we've written articles about all of the top 25, discussing how they wield their influence and how they interact with and shape our world. That includes Modi's struggles in South India, how Elon took over, Giorgia Meloni's battles with the Italian judiciary, and Trump's monumental comeback story. Also, if you want to dive even deeper, the premium edition of the magazine also gets you access to bonus videos. That includes the team debating the ranking of their top 25, with it getting pretty heated at times.
We could potentially have a monumental jump on our hands.
Yeah.
Hands up for leapfrogging into sixth.
The most powerful European country, the second biggest economy, the nuclear power that is... The nuclear power!
Yeah. We also recorded the team's reaction to the audience's rankings, so you can find out what they really think about your votes. It's not just about the most influential people either. Too Long also contains articles about the current state of the UK, the new right in Europe, and if peace can really hold in Gaza, along with a whole variety of other stories. Too Long is truly some of our very best journalism, with the audience consistently saying that previous issues vastly outstrip their expectations. So if you want a copy too, head over to toolong.news to pick one up. And if you never want to miss an issue, you can subscribe, which also gets you a 20% discount on every issue as long as you stay a subscriber. Plus, just this week, if you use code INFLUENCE, you'll get an additional £3 off any subscription. Too Long helps to fund our journalism year-round, and also allows us to keep all of our YouTube videos free. So we really do appreciate your support.